Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol, UNG. Today we're down 2.1% and we have about 1 hour left in trading. On the 1 hour chart we were on positive MACD and it seems like we are turning back to negative MACD. On the 4 hour chart we do see that we were converging and we are approaching positive MACD on the 4 hour chart. But I do see we may encounter resistance on the daily chart. So the resistance that I see is this 9-day moving average. We have not closed above this blue line. Ideally, that if this trend were to make a reversal, it makes higher highs or at least close above the 9-day moving average. There could be an instance where we touch back to the moving average and hit resistance and head back lower. So the next support will be this price range. As indicated, there's a price concentration around $18.50. So I'll mark that as our next support level. And for resistance, if we do manage to close above the 9-day moving average and make higher highs in next coming days, the next resistance will be this 18-day moving average or this purple line at the price of $21.30. So if we were to move on higher, that price movement is roughly around 8.6% higher, and if we were to continue in this downtrend, it will be about 6%. And let's head to the forecast model. On here, I'll go day by day, where natural gas will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below it is a trend that I believe is the best match to it. So let me point out why these two trends are similar. So what we have here in the beginning of the trend, we start off touching the upper Bollinger Band, and let's just mark all the instances where it touches the upper Bollinger Band. So we have 2 instances, and next let's mark where it averages down below the middle Bollinger Band. So we have 1 instance there, and finally let's mark where we touch the bottom Bollinger Band, 1 towards the end. And on this trend we start off touching the upper Bollinger Band, and next let's mark all the instances where it touches the upper Bollinger Band. So we have those 2, and then next let's mark where it averages below the middle Bollinger Band. So we have that there, and finally let's mark where it touches the bottom Bollinger Band. In this case, we have not quite yet touched the bottom Bollinger Band, but if we proceed further, we do back down here. So we have that instance. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So again, the trend that we just examined was 2011, March 24th to June 20th, 2011. Back then, natural gas was down roughly around 76 basis points. So not much to the upside and not much to the downside. So we will most likely encounter sideways price action. And for this forecast model, the link is available, or sign up in the link below to get access to this forecast model. It should be released in the next coming days or weeks. It will be out soon. So that is all. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.